What's up, guys? It's your boy, Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Plug Power, ticker symbol PLUG, trading for $15 a share as of October 22nd, 2020, equating to a market cap of $5.6 billion. It's been a crazy ride for Plug investors as the company traded sideways for nearly a decade. It's only as of recent that the company has been able to show some solid returns for investors, with the company being up over 400% within the last year, and yet down nearly 20% from its highs just in the last 2 weeks. So what's the move? Are we pulling the power on Plug, or are we topping off the tanks with hydrogen fuel? This is your Quick Stock Analysis. Of course, Plug Power is a company engaged in the design and manufacturing of hydrogen fuel cells and related technology. Even though we've covered the basics of hydrogen fuel cells in many other analyses, link in the description. Just so we're all on the same page, here's how Plug Power describes hydrogen fuel cells. A hydrogen fuel cell is an electrochemical power generator that combines hydrogen and oxygen to produce electricity, with water and heat as byproducts. Simply put, hydrogen fuel cells form energy that can be used to power anything from commercial vehicles to drones. Hydrogen fuel cell technology offers advantages of a clean and reliable alternative energy source to customers in a growing number of applications, including electric vehicles, forklifts, delivery vans, drones, and cars. Primary and backup power for a variety of commercial, industrial, and residential buildings, and more futuristic-sounding applications like air taxis. Alright, now that we have the basics under wraps, let's look at the bull case for Plug Power. Hydrogen fuel cells make an intriguing argument for weight-sensitive loads. After all, hydrogen is the lightest element. Just to put this into perspective, hydrogen used in fuel cells has an energy-to-weight ratio that is 10 times greater than lithium-ion batteries, and an energy density that is almost 3 times higher than that of diesel, along with offering a much greater range while being lighter and occupying smaller volumes. It can also be recharged within a few minutes. All of this makes for an intriguing argument in regards to delivery vans and Class 8 trucks. We may get some flack for our next statement, but remember, this is our bull case and it certainly holds some merit. In high heat or low carbon heating applications, hydrogen is the best solution. After all, when hydrogen is burnt with pure oxygen, the end products are heat and water. The big advantage is that no greenhouse gases like carbon dioxide are produced. For a real-world example, if we stand any chance of meeting the target of net zero carbon emissions, an enormous challenge that will need to be addressed is home heating. A shout out to our UK viewers. Warming homes is responsible for between a quarter to a third of the UK's total greenhouse gas emissions, which is staggering, considering the UK is trying to reduce carbon emissions to effectively nothing by 2050. That goal seems impossible with current central heating appliances. The attraction of hydrogen is that for a lot of customers, they would not notice a difference. Of course, we are oversimplifying this, as it would require swapping gas networks to hydrogen and maintaining old pipes, as hydrogen gas reacts with old metal pipes, making them brittle. And of course, they would need to find a massive supplier. Plug Power, maybe? Leading to our next bull case. Unlike many other companies in the green space that are driven on complete hype and investor optimism, Plug actually has proven itself in many ways. By the end of the year, the company states they will have shipped 40,000 fuel cells that will have run 500 million hours. The company uses 40 tons of liquid hydrogen a day. They are not only technology rich, but they have put their tech into actual practice. Plug has over 100 fueling stations. They have customers who buy their products and then become reliant on Plug for the hydrogen and maintenance. Along with a long list of customers including Verizon and FedEx, they have 3 pedestal customers including Amazon, Walmart, and Home Depot. When you take into consideration the not-so-small fortunes these companies spend on R&D, it's clear there is a benefit provided by hydrogen fuel cells that prove to be the most feasible option from an operation and environmental standpoint. Simply put, cash is flowing into the green energy market, which allows for vast improvements in cost and efficiency. For example, in the last decade, solar modules are down 90% in cost, and wind turbines are down 49%. As technology advances, it really does open up new markets for Plug. The company has already proven the practicality of hydrogen fuel in forklifts used in warehouses and distribution centers, which is great, but it's a positive sign for potential investors that the company believes that this is still early stages in regards to the adoption of hydrogen fuel cells. Currently, they are broadening their applications by developing drones, EVs, engines that are powered by hydrogen for data centers, aerospace, and a ton of other impressive concepts being thrown around. Another massive catalyst for Plug is that many governments and large companies are changing policies that demand sustainable solutions. Plug is building out 5 plants that they state will be completed by 2024. These plants will be green hydrogen, powered by hydro, solar, and wind. All of these advancements are allowing the company to make huge innovations in the space. Plug states that by 2030 to 2050, they will be competitive to fossil fuels from a price perspective. By 2030, the company hopes to achieve a $2 kilogram delivered cost, and by 2050, a price goal of $1 per kilogram. Once again, one could certainly argue we are getting ahead of ourselves. The company really hasn't laid out its plans in regards to long-distance pipelines. It's hard to say if these pipelines are going to move over land, like typical hydrocarbons, or something entirely new, leading us to the bear case for Plug Power. The company has a long track record of over-promising and under-delivering. After all, that's been the case in regards to the company for over a decade. And many bears argue it's once again setting up to be a trap for new investors who have yet to have been burned by the company. Along with this, Plug Power has set guidance to achieve $300 million in gross billing this year, which is a 25% increase in growth year over year. However, remember the company is far from profitable. From a historical standpoint, not only has the company not had a single profitable year in the last 20 years, it's actually become less profitable as opposed to more. However, to be fair, it seems as though the company may be changing its direction, as Plug is aiming to have a revenue of $1.2 billion in 2024, and to be EBITDA profitable. Of course, it is important to note, in a bear case argument, the majority of the projected revenue growth, more than $750 million, is expected to come from the material handling industry, and it will be several years before Plug's other projects play out, if ever. With that in mind, investors are going to be on the hook for keeping the power on at Plug for the foreseeable future. And regarding the concept itself, remember, hydrogen is the simplest and lightest element, which makes storing it safely difficult as you need extremely high pressures to convert it from a gaseous state to liquid. Along with this, just like electric vehicles, hydrogen fuel cells need a switch from AC to DC. These factors make it expensive to transport, and their transport cost directly correlates to a discrepancy in prices. Finally, our last bear note before getting into what's our move. Here's a quick clip from the ultimate bear regarding hydrogen fuel cells, Elon Musk.
I don't want to turn this into a debate on hydrogen fuel cells because I just think that they're extremely silly. The people have published, there's multiple sort of rebuttals of it online. It's just very difficult to make hydrogen and store it and use it in a car. Hydrogen is an energy storage mechanism. It's not a source of energy. So you have to get that hydrogen from somewhere. If you get that hydrogen from water, so you're splitting H2O, the electrolysis is extremely inefficient as an energy process. If you say took a solar panel and used the energy from that solar panel to just charge a battery pack directly, compared to try to split water, take the hydrogen, dump the oxygen, compress the hydrogen to an extremely high pressure or liquefy it, and then put it in a car and run a fuel cell, it is about half the efficiency. It's terrible.
So with all of this in mind, what's our move? Disclaimer, we are certainly not a financial advisor. Please do not buy or sell anything because it was purchased here on Quick Stocks. Simply put, Plug Power doesn't have a good track record of looking out for the average investor, i.e. you and me. However, I do think the company is trying to make the world a better place. Everyone understands the importance of going green, and hydrogen fuel cell is setting itself up to be a massive market in the future. Honestly, it seems like the company is finally getting on some solid footing. Granted, it's taken 20 years of trial and error. After the company's historic rally, all eyes will be on Plug Power for their next earnings call, which is expected November 5th, 2020. And for transparency's sake, we currently hold a whopping single share of Plug Power, which I never really plan on selling, as it was our first gifted stock from Robinhood. But for real, in regards to our quick stocks long-term portfolio, I do like Plug. And honestly, as a long-term investor, I'm certainly intrigued. Let's be real, at its current $6 billion market cap, if even only half of the company's goals came to fruition, it's easily a $100 billion company. However, considering between our accounts we have just shy of $80,000 invested in Tesla, and honestly, I'm more than happy with our exposure into the green energy space. I could hear some of y'all saying, sell some shares and start a position in Plug. Simply put, for tax reasons, that would not be a good play at this point in our life. However, I will certainly be watching Plug, and if by chance they miss their next quarter's earning and share price drops to the $12 range, that would be an intriguing starting point for us to open a position. Anyways, guys, that's all we've got for today. As always, the best investment you can make is to go long on quick stocks. Hit that subscribe button now at 1,800 subscribers and plan an early retirement. I will catch you guys in the next one.